What's going on, everybody? It is, what is today? Today's Wednesday, right? 23rd of July. I mean, we are 6 months in and another month about to be. And some of us are enjoying the warmth. Others are kind of, maybe thinking about life choices right now, as apparently Lexington, Kentucky did not get the memo that it is July. Either that or Andrew just has so much money. He just turns that AC down to like 55 and then just
to be fair, the AC in my house is on 65. I will make that clear. So I do freeze out everybody in my house, and I just let them know.
Man, that is
put on more clothes. Just put on more clothes.
Your units must be just cranking all the time.
Yeah, that's right. That's right,
mine.
Dave.
That's mine. Yep. But I'm in Texas, and it's 100 degrees over here. So, yeah. Anyway, hey, listen, man, what a week! Bitcoin kind of do some consolidation sideways. A lot of news coming out there. A few of the things, Mara doing the 1 billion, up to 1 billion. They're going to, try to get in to buy Bitcoin and do other things. Mara, out of the miners, is it the only one or one of the very few that's not actually selling their Bitcoin? They're right?
Yeah, they're a treasury company. I think they're actually borrowing against it to buy more and all that stuff.
Yeah. So, another $1 billion coming out there. We got Trump Media just bought $2 billion in Bitcoin, puts them in the top 10 holders, of course, going on there. And then Bitwise ETF, their crypto ETF, was approved, and then within hours later it was halted by the SEC. Going to talk about it some more there. So lots of interesting stuff going on all these different ways here. Also, before we get going here, guys, I just want to let everybody know I do have a free newsletter called Hash and Hedge. You can get it at hashandhedge.substack.com. And in there, I put my longer form Bitcoin thoughts. And so I talked about proof of work and Bitcoin, whatever that last time. I've actually got one I'm about to put together here talking about, are we in a super cycle? Could we get into a super cycle? And also, compared against that, is Bitcoin really establishing its monetary base, itself as a monetary base right now in the whole financial thing? So, people can go over there, sign up for that, and they'll probably release it here in about a day or two on there. So it's just easier than Twitter and everything else to try and push those long form thoughts and whatnot. So yeah.
I think you should change the name of your newsletter to Beards and Bitcoin, if I'm being honest.
Well, I don't see y'all writing nothing in it, so no.
You should just put our faces in it, and you'll get more clicks. I mean, I'm
not trying to scare people away, Andrew.
That's not true at all. That is not true.
You know what, Andrew? Consider yourself lucky. You found a woman who's willing to look at your face every day, man. I mean, seriously. No, man. Money does wonders. I have
with the high heat, I love it.
We gotta get going somehow, right?
I do consider myself lucky every day that a woman wants to look at my face. Let's call it, the better part of 16 hours a day. When you break it down that way, it's a compelling thought to have.
Significant.
This person wants to look at my face 16 hours a day. That's something. That's something.
Just talking about it makes me want to change the subject.
Yeah, just talking about it is it does something to your mind a little bit. You're like, I need to, maybe I should work on my face.
I see subscribers not just unsubscribe, they're killing themselves right now. We're talking about your face, Andrew. I mean, this is horrible.
And listen, it wasn't me. I didn't bring it up. I didn't bring it up. I wanted to elevate the newsletter. That's all I'm trying to do here. I'm here to help Chris, trying to elevate things. That's what I'm doing.
I'm just doing what I can to help you warm up over there, man. Trying to make you laugh, get your body moving a little bit since you're not there doing jumping jacks or something. So,
Hey, who is this turd burglar in the comments saying not beards and Bitcoin, please? It's so corny. Like, come on, man. What are you doing here if it's so corny? I'll show you corny, by the way. You want to see corny? I'll give you some corny.
See, y'all got to go get Andrew all worked up, right? Man, oh, man.
Well, I told Andrew at 109. I said that I think the next stop will be 122. Andrew, you can attest to
Yep,
that.
that is true.
And it hit it perfectly. And the only reason why I was saying 122 is I think that there's a new type of escalation curve that's in play based upon Wall Street's involvement in Bitcoin now, and based upon kind of the rising tide floats all ships theory, and what institutional money is now flowing in systematically into buying Bitcoin and DCAing over long periods of time. When you deploy huge amounts of capital, which is now we're in the phase of institutional buys, they don't happen overnight. They happen over long periods of time. So it's, what does it do? It makes the appreciation curve more predictable but less volatile, and that's going to continue to be a trend with pretty good certainty as far as I'm concerned. And so I've been testing that theory over the last 5 or 6 cycles, and it's been holding true. And that's how I came up with the 122 number, which is that Bitcoin is now moving in chunks of 10,000, and it was relatively noticeable from a percentage perspective down lower. But I mean, everybody's freaking out and loving the fact that we're at, what are we today, 117 or 119, 118?
118, there you go.
Yeah, 118. If we're at 118 today, I mean, that's only $9,000 off of our high. That's less than a 10% move from the previous high. I mean, come on, guys. Like, we used to get excited about like 40% daily moves. 10%? I mean, what are we getting? This isn't what, I mean, come on. The price is going to start moving in larger and larger increments. And I've been thinking about this, and I wondered if there was some sort of mathematician that studied it that gave it a name. But, as the price expands, the relative percentage move also, but doesn't expand proportionately, is I guess the point. And so what we're in now is a phase where if you got in early and you are a whole coiner, you're in a potential to see huge gains. Because when you start to see Bitcoin, let's say Bitcoin is between 200 grand and 250,000 bucks. Well, a $50,000 move, which is meaningful money to people who own one Bitcoin, is really not that big of a percentage move, right? And so it's 20%, essentially. So the higher the price goes, what does that mean? Well, it means based upon the money supply, the M2 money supply, and how perfect that Bitcoin curve is against that. I believe, and I've been testing this notion with anybody that I can talk to about it, which is that Bitcoin's price isn't appreciating. It's just gravitating towards its natural position, its natural use case, its natural highest and best use, which is a indicator into M2 money supply. And if you draw that out mathematically, and you say, okay, well, if you had a 1-to-1 M2 money supply indicator like Bitcoin, which it seems to be gravitating towards, you would blow past real estate, you'd blow past gold market cap, you'd get up into the, inflation of 4% a year, 10 years from now. That's a price of $7 to $9 million a coin. So I think we go there. I think that it's inevitable at this point. I think the fact that it's been de-risked, and we're starting to see the movement of Bitcoin in these systematic chunks, these blocks going up of $10,000 price movements, it just makes me very hopeful that we're at the beginning of like the S&P 500, like at the beginning, you know what I mean? Where it hadn't been the sexiest, but boy, if you got in at the beginning of time, I mean, in fact, I saw somebody that's talked about this, but you're a 100+ millionaire even with the smallest investment.
100+ millionaire, huh? Is that the way we're going to refer to it?
Well, I can't remember the numbers, so I'm underestimating them.
Oh man, yeah, no, really, and great insights there, of course, and something that we've talked about numerous times on here. that I don't think enough people are really paying attention to is the lack of a big pullback. And Andrew has really like nailed this again and again, this point. And here's the reality, folks. And the reason why Andrew's nailing, for you to listen to is because before this cycle, Bitcoin throughout the cycle was dropping 50% or 60% on pullbacks. I think we've got near 30% one time. Everything else been like 10 to 20% on those pullbacks generally. The importance of this is, why do we have such short pullbacks now compared to what we've had the entire history of Bitcoin? And that is a product of institutional investment. And that's the point Andrew kept trying to make over and over and over again. Even before we got all these companies started jumping Treasury Company and all these companies started to do all this, is the fact that, listen, we are not getting pullbacks like we used to. You're getting institutional support on that. Isn't that right, Andrew?
Yeah, I said that price action had materially changed like 16 months ago. There was a post that I did that I had pinned for a while, but I, who knows where it is now, so far down my feed. But and that is the case. I mean, you now have a high floor, high ceiling type of asset that the biggest institutional names on the planet have got their hands on, are creating product around, and now we have regulatory open roads, and so those biggest names are going to just absolutely run wild. There was new headlines today about Bank of New York Mellon associated with money market accounts, and for all intents and purposes, the tokenization of those money market accounts. Again, if you're a client of those firms and you start to use that technology, you start to think, boy, this is cool. How do I invest in this? Right? And the first investment you're going to make is Bitcoin. Like, there's no doubt about it. That's going to be the preordained safest way to have that conversation with that client at that institution. How do I invest in this? Well, here's 10 Bitcoin ETFs, and they've all set records over the last 2 years. You want some of this? Yeah, I do. Zap, and in we go, which is why we see inflow after inflow after inflow after inflow. I also think that by the end of Q3, my best guess is that BlackRock's IBIT product will be at $100 billion. It's at $86 billion right now. It's gotten to those levels faster than we thought they would every single time. And it's remarkable to see an acceleration, right? So at the end of 2024, essentially a full year of being on the market, it was at 40 billion. Well, it's literally doubled that number plus inside of the first 6.5 months of the year. So there's an acceleration of buying of Bitcoin that we're seeing. And again, it all comes back to, as crypto begins to press out the edges of traditional finance and make meaningful changes, whether it's blockchain, whether it's stable coins, whether it's 24/7 trading, whether it's tokenized securities, all that stuff is happening right now. In fact, Ken Griffin at Citadel, tokenization of securities is happening so fast that he's like, hey, well, can we slow down a minute on the tokenization of everything, because it's happening so fast we can't keep up. Yeah. That was a real headline from late last week, is the guy that will probably benefit the most from the tokenization of securities and equities is like, this is moving so fast. So, and again, the trickle down nature of all that is, when clients see what's happening and hear what's happening and read reports, and this is on the cutting edge of innovation, they're like, how do I invest in this? Bitcoin is the answer first. Okay, you want to dig a little deeper? ETH is the next answer. So that's why ETH inflows are ticking higher as well. Because how do I invest in all of this? And the answer is Bitcoin and Ethereum. And that's why we're seeing that's why there's a high floor to Bitcoin's price, because there's just simply no end short and midterm to the amount of capital that's pouring into Bitcoin. There's just no end.
Yeah.
I did hear a rumor that after Strife and Strike and Stretch, that Michael Saylor may announce next week his new preferred called Stench. And so that could be coming to market. Stench could be coming to market. I hear that Tillman's an advisor on Stench. That's what I heard.
I've never even heard of Stench, so I must not.
I don't think he was saying because you heard it, Tillman. I think he was making a comment towards you.
No, it's a joke. Stretch, Strife, Strike. You know, Stench.
Right? Yeah.
The next one's Stench, and the one after that is Stain. That's what I'm thinking. I mean, how many S's can you come up with? I don't know.
Yeah, a whole lot, right?
As many S's as you keep piling money into. That's the answer.
As long as there's a dollar out there. Yep.
Well, that's what I was sitting here thinking about while you were talking, Andrew. Is like, I wonder how much of the BlackRock success has been cannibalized by the whole treasury narrative and the money that's flowed into that. I mean, I think the deepest pockets probably see the treasury plays in MicroStrategy as a very unique play, and it's probably that capital is uniquely classified towards that type of a vehicle. But I would think that there is there's a lot of vehicles taking a lot of money on, is the point. Yeah. Like if you concentrated that down into a single, entity, you're talking about just hundreds of billions of dollars of liquidity that's flowing into this market. Yeah. Adoption and larger wallet size has been the strongest indicators of Bitcoin's price, coupled with the M2 money supply. So more people that use Bitcoin and the more money that they have makes Bitcoin's price go up. I think we're early in the adoption curve, and I think we're the earliest as it pertains to sovereign nations and treasury companies and balance sheet companies and all the largest buyers that are going to want to hold value in the form of ownership of some of the most valuable networks on the planet and their growth potential. So, once you understand that Bitcoin is just a network, and that the unique opportunity is that you can own a piece of the network and you don't have to ask anyone's permission to own a piece of it, and you get to experience the increase of value that the network represents based upon its adoption curve. So if you think you're early, you want to own a lot of it. If you think you're late, you don't want to own so much. It really boils down to that simple notion. And I just think if you look at, banks adoption and all of these announcements, they're all forward facing. They haven't even happened yet, so we're still really early in the game. And, you don't know when things are going to pop. And when they do, though, the amount of capital that can flow in is jaw-dropping. And I think there will be, based upon the global supply and based upon the global demand, I think there's going to be always, like Andrew said, a pretty sharp response to any discount in price. Like, oh, there's a discount in Bitcoin, I'm buying some, that because it's such a sterling example of what a network should represent as it pertains to being decentralized and, instant store of value, liquid, highly modable and transportable, all of the values that we've grown to love about Bitcoin.
Yeah, I actually made a post just yesterday. And, you're talking about being early. And I said, we may think we're early, to crypto, but in a 200-year arc, we're probably, we're proto-primates, still sketching symbols on digital cave walls, right? And I had somebody respond and say, all the movies out there and everything, about the future show people using, hard money, using, not hard money, but using precious metals and whatever to do that. And my thought is, well, yeah, but so, I mean, just because the movie is saying that doesn't mean it. I think honestly, now 200 years from now, do I think Bitcoin maybe? I think it's a possibility, but honestly, in 200 years, at the rate of technical advance, I think there's a good chance we may even move beyond Bitcoin and start looking at energy being, monetary value being measured in terms of energy, right? Because it's already kind of what we're doing with Bitcoin as it is. And what do we know? We know there's asteroids out there that have, 100 times all the gold that's ever been mined on the planet on one asteroid, right? So this idea that precious metals like gold are going to stay what they've been, I think that's going to fall out of favor, honestly. And I know that's heretic to say for most people. I know that's, it's a very, people don't want to believe that, but I think there's a lot to think about when it comes to that.
I differ in opinion a little bit. I think if there was any type of divergence from Bitcoin's core purpose of being a monetary system, it would be to be a defense system, because survival is the only thing that matters. So, for example, if you have AI and it is the game changer, it allows you to basically query this machine that's the almighty genie, says, show me all the weak points in this government that I don't like. And, and if you're a country that possesses that, you become almost, and if you are experts in querying this machine, you can basically pick apart any enemy that you have. You can be more advanced than any other civilization. You can attract more capital than any civilization. So let's say you spend all the development time and natural resources needed to build this machine. Well, how are you going to secure its properties? Well, I do think proof of work is probably something that, if we can agree that AI can be as destructive as a nuclear weapon can be, which I think is not that far from everyone's thinking, then we should globally secure those types of technologies with something that the global governments that are in, essentially you know, uh, in trust with one another, and in uh, the nuclear arms agreement with one another, we get back to back and we go, listen, if anyone wants to stand outside of this and use this technology for nefarious purposes, then we will use the technology against them and essentially take them out. And that's exactly what we've done with nuclear weapons. And I think that's what's going to naturally happen, because knowledge is power. So is might, but so is knowledge. And when you have something, that AI can deliver to you, coupled with quantum computing, the best way man's ever thought of to secure it is through a difficulty curve attached to the energy that is being applied. No one's ever thought of anything better than that, and that's what Bitcoin is.
Yeah, no, I agree, man. It's. I think we're just on the precipice of of a huge change, and not just it's in our whole monetary system, the way we view the money, and whatnot.
The huge changes are just going to come at the Wall Street banking level. There's going to be dramatic shifts in how money is moved, where money is stored, and what expectations are of capital. That's going to happen right now and over the next 2 years. Markets and how they operate, markets and the timing in which they operate, the way and the speed and pace and cost at which money can be moved is going to radically shift and change. And again, when you have the likes of JP Morgan announcing that they're taking a really hard look at lending against crypto, you have Bank of New York Mellon talking about tokenizing money market funds. A reminder of what those two organizations are. JP Morgan is one of the 5 largest banks in the solar system. Okay, let that sink in. And then 2, Bank of New York Mellon, along with State Street, is effectively the biggest custodian in the solar system. So if you want to talk about having pulleys and levers, that when you inject crypto / blockchain / stablecoin, new incentives and innovation into, there's going to be an explosion. It will become the standard as opposed to a side project.
Well, let's talk about this because I have some questions for you because I think
Mhm.
you've got a pulse on this that's pretty unique, and I genuinely am interested. So there's been this theory that I've heard going around that, there's going to be two juggernauts that emerge from this industry, one being Coinbase and the other being Robinhood, and that they were going to essentially be the two future finance firms. I believe Robinhood possesses a very unique value proposition. I think it has a very unique customer subset that's going to grow over time, and it's going to supercharge their growth curve because they have a large portion of their customers that haven't reached their peak earning potentials. And so that's going to just naturally make their deposit amounts grow as they do. So I think Robinhood is going to be around, but to think that there's not going to be a legacy company that comes out and says, Coinbase, you got some competition. There's a new sheriff in town. Like that seems naive to me, but I also don't have enough information to think who would have the balls and who would even be in that category. Like who could stand up against Coinbase with any meaningful
Right.
might? You know what
Yeah,
I
great,
mean?
great question. So I had a conversation with a TradFi guy actually on Twitter, Monday, maybe late Monday. Great registered investment advisor, well known in the space, and we're talking about the fact that Coinbase is going to make some serious acquisitions. They just are. Their currency right now is, it's under 400, but it's gone as high as 420. It's significant. And my point is that Coinbase could buy Polymarket, which came back to the United States, right? Because Robinhood is already talking about having a Polymarket type of betting platform integrated into Robinhood. So that's going to become part of the lexicon of how people choose to invest. It sounds crazy to all of us here in our late 40s. But that is going to be
early 40s, buddy.
Yeah,
I don't
that
turn
is going to be
45 until August.
that,
Okay.
that is going to
Early
be
40s. I'm
that
still
is going to be
in.
part of the lexicon of quote unquote investing. So
Yeah.
Coinbase could buy Polymarket, and then I was asked, well, who could buy Coinbase? And I said, slow down, because
That's what I'm
here's the
saying.
truth: it's $100 billion company, right?
Yeah.
Their
Yeah.
market
Who
cap
can buy
currently
that?
is more than $100 billion.
But I'm not even saying who can buy it. Who can challenge it? And if it's not who, what team of companies could assemble to challenge it? Because it's not gonna. There's no universe that exists where there's only Coke and no Pepsi.
Yeah.
It's always
Well,
you.
just recently, Charles Schwab said, they're going to allow trading and whatnot with all cryptos. And they literally came out and said, we want to,
Well, again, the problem with
Coinbase.
Schwab is the demographics.
Yeah.
There aren't any 27-year-old dudes using Schwab.
Yeah.
Like, they're nobody. There are no. If you poll
Could the capital
127-year-old guys, do you have a Schwab account? The only ones that don't even know that they have, because some place they worked, they had an account there or something. They're not actively doing it. They've got a Coinbase, a Robinhood, and maybe some sort of decentralized exchange account on their phone. That's what they have, right? So who can compete with Coinbase? It's very difficult to do because they've got 20 to 25 million customers. That's only going to continue to grow. There's going to have to be a conglomerate of mergers and acquisitions that end up competing and potentially overtaking Coinbase, right?
Well,
is there a world
there's an
where
interesting dynamic, and we've talked about this with Arch Public Software, where the value of a customer is all relative to the amount of trades that they make, how active they are, and how much they utilize the platform as a bank. How much do they keep on platform? And if you notice, Coinbase has been offering 4% interest rates on US held USDC. They're a bank now. I mean, for heaven's sakes, they are a bank. And so it's already started. The question will go ahead.
no, the question is, so Robinhood's market cap is 90 billion, right? Morgan Stanley's market cap is 225 billion, right? So, start looking around at market caps, looking around at finance, traditional finance versus emerging finance. I've always called crypto emerging finance.
So you think Robinhood could be a great acquisition to essentially
could be an extraordinary acquisition. Okay. So,
that's a really interesting. I'm glad I asked that question.
Morgan Stanley, for example, they acquired E-Trade, like 4 years ago, right? Why did they acquire E-Trade? I've talked to Morgan Stanley people about this. It's not accretive to bottom line results. They went from having 4 million customers to having 30 million customers immediately when they acquired E-Trade. Same thing with Robinhood. If they go and get Robinhood, now they're on the cutting edge. They've grabbed 30 million more customers. Now they've got 60 million customers, and half of their customer base is active.
Well, they've got now a lot of stored energy for the future if they do that. Whereas I would think their energy now is on the dwindling side or the waning side. Yeah. Good point, man. That would be you talk about some alpha. I wonder what that acquisition would be huge.
We're on the precipice. We're on the precipice again of this demographic shift, right? Where boomers will end up, dying off and giving their capital to their sons and daughters. And so, what are their sons and daughters going to do with their money, right? Like, Tillman, you and I both know the way that we handle accounts and where we have accounts at very different than our fathers, right? Very different. So that's the same shift that's going to happen all over the place. And it's just a question of and now imagine another shift when there's an additional movement in demographics, and now you're talking about 23-year-olds. What do 23-year-old accounts look like? Venmo, Cash App, and they've got some account somewhere that all that account is a conduit to Cash App, Venmo, PayPal, Robinhood.
You know what keeps popping up for me, and I don't have one yet, but I'm almost forced to get one now because I'm getting hit by it so much, is Zelle. I don't have a Zelle, but boy, man, the people, you got Zelle? You got Zelle? No, I don't have Zelle.
Yeah. Right. And so the other, when we talk about it, right, and we're talking about, okay, so it's about client acquisition. So who's going to buy what? Right. Honestly, I got to be honest. I'm looking at here going, is there the potential that somebody buys a social media company? Mm-hmm. Because look at crypto Twitter. Look at on TikTok. Some of it's really bad advice on there, but the crowds are where they are. If you want to figure out sentiment for markets, it's a quick a search and just go through the information that's there with your tools and whatnot.
I notice, Chris, oftentimes before you make a real salient point, you say, I've got to be honest here. I'm wondering, have there been times where you've not been honest with us? That's what I want to know.
I want to know that too.
You're gonna have to wonder, man. You're gonna have to wonder.
There's going to be significant M&A activity in the world of finance over the next 5 years. There's going to be incredible disruption. That disruption will cause some acquisitions and mergers that make a lot of sense. There will be some that make no sense, but they're just panicking and responding, right? So I dare you to look up the amount of customers at Coinbase and its market cap versus, and I'll just do it right here on this show. Let's take a look at the latest partnership that they just talked about. So what is PNC's market cap, right? So Coinbase is working with PNC to make crypto products more available at PNC Bank, which is a sizable regional bank. Trades at $200 right now, but its market cap is $77 billion. Okay. Now let's ask, how many customers does PNC have?
And the answer is?
And the answer is that PNC has 9 million active accounts. 9 million, guys.
9 million.
9 million. So PNC is an ant,
Yeah.
according, connected to Coinbase. Coinbase is not reaching out to PNC to create a partnership.
Yeah, I know.
PNC is reaching out to Coinbase to create that partnership. Okay.
Yeah, but here's the thing that, macro, okay? I like economics. And
It makes me hungry. It sounds like macaroni.
yeah, it is very much like macaroni. If that keeps your attention, focus on that, okay?
Right.
Um, Coinbase is a product of government suppression.
Sure. Correct.
There has been one funnel, if you wanted to play in crypto, that was, quote, allowed, essentially, in the United States, and it was Coinbase. How many outages have there been? How much price gouging has there been? How much, how much not free market competitive behavior have we seen and been exposed to over a relatively long period of time for how much money the company's made? Like like, I'm not saying it's the worst user interface, but I'm saying it's not the best, and they've got the biggest budget, is what I'm
Yeah.
saying. You know what I'm saying? Like, so you do look at an interface like Robinhood, and it's much slicker. And, there's been custodial issues that have been worked out with them as it pertains to you being able to move it off platform. But I think now, you can. But my point is that I don't think if you can get the customers to use a better platform, that they'll stop using it. Once they feel like it's a better platform, they'll use it. And I don't think that's that high of a bar. I really don't. I think there's going to be a natural opportunity here. And if you look at how high the fees are in the crypto space versus the traditional space, why wouldn't you want to come into the game? The
Well,
water's
and again,
warm.
that's an opportunity to either significantly enter the space or to acquire the space, right?
Correct.
For at least another, 3 to 5 years, fees will be somewhat elevated. Now, over time, they'll come down. They have to come down.
Yeah.
Because in traditional finance, commissions are basically zero. In the world of wealth management, commissions effectively don't exist. You pay a fee for service, either on a quarterly or an annualized basis. And those fees used to be 1% of your total account value. That doesn't even exist anymore. It's anywhere from 25 to 45 basis points in total. So, over time, there are going to be, again, massive shifts in the space. The amount of exchanges that are here in the United States, man, what's that going to look like in 3 years, right? They're going to go public. Gemini is going to go public. Bullish is going to go public. Others are going to go public. But again, in the TradFi world, 5 years ago, we had, TD Ameritrade. We had Thinkorswim. TD Ameritrade bought Thinkorswim, right? We had E-Trade. We had a bunch of others, right? There's still others. Interactive Brokers. Interactive Brokers really isn't an online trading. They're actually the foundation of all the other online trading places. But now TD Ameritrade is owned by Schwab. E-Trade owned by Morgan Stanley. Thinkorswim got eaten by TD Ameritrade several years ago.
Yep.
There's very few opportunities for online trading unless you go way down the list. And now you're talking about places that there's not a lot of customers, right? There's just not a lot of customers. So we'll see where it goes. But the amount of money and new currency that are going to be printed this year, what does that end up looking like? And how is that currency used is the real question. Going to be fascinating. It's really going to be fascinating.
I think it's a matter of survival.
Mm-hmm.
You know what I mean? Like, I think for a lot of these financial firms, the quicker you are able, it's like a bet of which train do I stay on. And if I re-identify with this new train of Web3 and crypto and all the things that go along with it, the stable coin, and I build that interface, I'm going to have to shift. I can't run both. I'm going to have to shift all my legacy customers. That's disruptive, right? It's not something people like to do. Big integration shifts and big integration of new dashboards, new platforms, new tools, new desktops. That's a big pain in the butt, and you lose customers because of it.
Yeah.
And so you kind of do that at last resort, but this is forcing your hand. And it's not forcing your hand in a redesign of your colors, and it's not forcing your hand. It's forcing your hand in redesigning your complete infrastructure. And that is like a daunting task when you don't understand what you need to integrate. And so the race to get it integrated is going to be based upon how much money you have at your disposal to throw at the wall to just get it done. And that's going to be left to the biggest names out there, and it's going to be through, like Andrew said, through acquisitions. And it's going to be really interesting, because if it's about survival and it's about acquisitions, that tells me the price of the acquisitions are going to be jaw dropping. And
Yeah.
we've already seen them be jaw dropping. I mean, we've already seen a few $billion offers this year alone, haven't we?
Well, not only that, if you're so let's put into context the money that's washing around out there. If you're Facebook and you're paying $100 million for a new AI employee, right? And potentially over a 10-year period paying $1 billion for a couple of employees, that's a real thing. That's really happening, right? Again, we it's been a while since we've had meaningful merger and acquisition
Yep.
Activity, because the last administration was anti-merger and acquisitions. They just didn't let it happen. So they're going to start happening. In the last administration was very anti-crypto. So in this space, again, an explosion of activity, an explosion of value, an explosion of capital, and it's it's very, very adjacent to high level fintech stuff. And so the numbers associated with tech have always been an order of magnitude larger than finance. But we're in this middle ground now where this is both tech and finance. So what are the valuations? What do they look like? For Coinbase to go out and buy Deribit for $2.9 billion, that's putting a stake in the ground. What's the next one look like, and who is it, and why, and where? I'm reminded of AOL Time Warner back in 1999. We laugh now; it didn't work out, but nobody's really laughing then, and it was a huge number.
It was huge, yeah.
Huge number.
Yeah, no, I remember it. I don't remember the number, but I remember the headlines and the news coverage.
Well, and again, those were two massive cultures colliding, right? Legacy media and quote unquote new internet media thing, right? And it didn't work. But at the same time, we are in a spot where the opportunity to grab
go big or go home.
Yeah, it's a you have the ability to do that. And then you add, let's say, over the next 2.5 years that interest rates are cut in half from where they are now. So now your ability to use your currency that you created out of thin air by going public, add some debt to it, which is now half of what it cost last month.
Borrow at cheap rates.
Exactly
cash
right.
Earning in the markets. Like it sounds like a recipe for economic growth to me. I don't know.
Yeah.
Maybe.
So we're headed in that direction. And so I don't know, keep stacking.
Yeah, but this is none of this is financial advice. Robinhood is not. We don't have any inside information about Robinhood getting acquired or anything. It's just fun to think hypothetically of this old legacy finance industry is going to merge with the new one.
We
And
we've lived enough life to know that things happen, and so again, a very small, again, sort of marker that's out there. So, who was the first large financial institution to fully approve Bitcoin, some Bitcoin ETFs across their entire platform? Morgan Stanley, right? And they're, by the way, they're still the only ones that offer it in an unsolicited way. So you're a Morgan Stanley customer with $800,000 in your account. You call them and say, "Hey, I want to buy some IBIT, or I want to buy some BitBeat from Bitwise." Like, okay, sure. How much? Click, done. All right. You can't do that at UBS. You can't do that at Merrill Lynch. You can't do that at Wells Fargo right now. You have to be in a certain category and in a certain way. So Morgan Stanley has always been a first to the party amongst a larger traditional finance conglomerate of companies. They've always worked to stay ahead, and so yeah, interesting.
yeah, it reminds me of the Shakespeare, misery makes strange bedfellows. Like when you find yourself dying on the vine of traditional finance, you're going to have to let down your walls and go partner up with somebody who's on the bleeding edge and try to make it work. And a lot will be successful, and I think a lot will fail, and that's going to be really fun because there'll be a lot of bets to be made, and they could be handsomely rewarded as the market consolidates into a single entity again, instead of this fragmented entity, segment that we have now.
Well, 30 years ago, there were, let's call it, 25 fairly large wealth management, investment banking types of operations, right? So there was Smith Barney, there was Solomon Brothers, there was Morgan Stanley, there was Goldman Sachs, there was Bear Stearns, there was a bunch of others, right? Now, here in the United States, there's Goldman, Morgan Stanley, JP Morgan, Citibank, and that's about it. Then you have down, a couple tiers down, you have what are considered regional wealth managers like Stifel, Janney Montgomery, Raymond James, and a couple others that you want to throw in there. Then
okay. I take it back. You don't just have useless movie trivia information in your mind. That was quite impressive. I've never heard of half of those firms. So good job.
Yeah. So, but that's my point, right? Is that, you forget about that these things happened, right? That Solomon Smith Barney was eventually, Solomon was bought by Smith Barney, and then Solomon Smith Barney was bought by Morgan Stanley. So those legacy firms just are gone now, and it's just Morgan Stanley. Same thing. Goldman Sachs has bought a few wealth managers. So that consolidation in that space is over. So how do they grow from here? How do they grow their customer base beyond what it is today? It's not going to be by product. It's not going to be by some new slogan. It's not going to be by, showing up at a concert with Pepsi and then people are signing up for their, JP Morgan accounts. That's not how it's going to happen. There are these huge organizations that they hated and they've said are stupid in Ponzi schemes for the last 10 years. Gemini, Coinbase, Kraken, blah, blah, blah.
And that's, before you address the juggernauts overseas. Bybit, Binance.
Binance.
Come on, man.
Dude, now again, I don't know how legit the numbers are, but Binance is bigger than Coinbase.
Oh, I know. Bybit is almost as big as Coinbase. They're right over 100 and something million.
Right. So, you're talking about, Binance, 220 million customers, right? They still are a meaningful player in terms of overall volume associated with Bitcoin trading on a daily basis. Like it's the real deal, right? So, that there is enormous growth opportunity there associated with, customer bases. So where does that go? What does that look like? Or does, to give you an example, a smaller exchange like Gemini, even though they have huge name recognition, they're not as big as a Robinhood or a Coinbase or whatever it is. A smaller exchange, but then they go public, then they have all this new money, right? This funny money that is their equity value, right? Say they're worth $15 billion and their founders are worth nearly that in Bitcoin alone. And they leverage that to make a couple of acquisitions. So now instead of having,
Listen,
3 to
that's
5
the
million
only
customers.
reason why you should do it. That's growth
Yeah,
capital. That is like a force multiplier.
You have 3 to 5 million customers. Well, now you've got 15 million customers, and that's bigger than PNC at that point. That's bigger than a regional bank here in the United States, right? So
we're talking about customer acquisition here. We're talking about growth via that. So the Western world has seen a significant drop off in birth rate, right? So what happens now? I mean, obviously the Western world, is kind of where you want to direct your efforts because that's where a lot of that money is. And yet, I mean, it's not that new people aren't being born, but the birth rate is at such a decline right now. It's significant, right? It started with Japan, decades ago, and it's even hit here in the U.S. and other places. So,
what in the world are you talking about?
Listen.
How did you pivot to birth rate off of Coinbase and Finance have a lot of customers?
Future.
What
Listen,
are you talking
because
about?
we're talking about the trajectory.
What the fork are you talking about, man?
We're talking about the trajectory of the companies going forward. So,
okay.
So what do they do?
I tend to only worry about problems that are inside of the next 4 generations of people.
Hey, listen, do they become much more cutthroat in the way in which they bring customers in? Or is there a way in which, because the outside the Western world, the growth rate is still pretty significant, right? It's still continuing up there. So, do they then start pivoting at some point here?
I don't think we're anywhere close to have saturated the middle market.
We're not talking about saturation just yet, but this is realistic, man. I mean,
I don't think they're sitting around at Coinbase talking about birth rates.
They should, though.
I could be wrong. I could be way off on this. Maybe you're a little
but the birth rates could change tomorrow to the better. Like that's something we can all contribute to.
No.
If that becomes an imminent threat, I don't think that we'll struggle for a response like we are with global warming.
Okay, I think you guys are misunderstanding.
We will know what duty is needed to be done, and we will serve our countries proudly.
Hey, listen, I've done my part over here. Yeah. I've done my part. Over here. Okay?
Yeah, I've got 4. I've done mine. I'm 2-for-1 ratio over here.
Listen, guys, I'm not saying there's an imminent, oh my God, we're not going to have customers anymore. What I'm saying, though, is we're talking about these companies, these companies that are talking about, okay, well, we're going to have to buy and we're going to consolidate. We're going to grow through, this. I mean, at some point, they've got to be watching it because they're not, these companies aren't looking at the next year.
I don't think it matters because it's about dollars, not about people controlling the dollars. You're just fighting for the dollars. So it's just about the money supply. If I'm fighting over 100 customers that all have $100 or 10 customers that all have $1,000, I don't really care. I just need the dollars in my exchange. So I'm going to I'm going to spend the same dollars that I would to get 100 customers for those 10. So if your question is do you think that you will get more perks as a high net worth individual that's willing to put a large chunk of it into a crypto exchange in the form of collateral? Yes, I think it's the highest and best collateral that we've ever created. And I think you will get a disproportionate return on that in terms of yield and perks.
Yeah. So there's the next part that what I'm talking about. So it sounds like you believe then that wealth disparity will continue to grow.
Well, absolutely. We've now denominated it against a new finite resource that's, the adoption curve of cash had a head start. The adoption curve of Bitcoin has a long way to go. And I think that's why we're here, because we believe we're early. But, we're not going to see that in our lifetime, where everybody everywhere is using Bitcoin. But that's the challenge. Why wouldn't you
want it forever? I don't know about you, man. What's this? We're not going to see it in our lifetime thing. Come on, man. That's a pessimistic thinking there.
Chris, I don't know if that's I think at some point, if you quote lived forever, if that technology existed, you'd be miserable. I mean, absolutely
I'd be miserable
miserable.
living forever. Yeah.
Yeah, no, I don't
Where's
think
the
that's.
joy in life, right? If
Yeah.
there is no death, how do you actually enjoy living? You have to have that.
Listen, this podcast has gone completely off the rails.
No.
We were on a really solid track.
We were on a heater.
Yeah,
and Chris brought up birth rates.
I got to do what I got to do. I got to
in,
get people thinking 200 years out, man.
Chris, stand up and show everybody your shorts.
We're trying to get people to create, wealth and the future for generations. We can't be thinking our 30 years we have left in this world, guys.
Well, there's a more direct way. Just go on poly markets and bet against birth rates, and then you make some money right now. We'll be good to go.
I don't bet, though. That's the thing. I don't gamble.
Yes, you do. You trade.
I don't.
So, yes, you do. All you are is a gambler with rules. That's all you are. With rules.
I take well-qualified risks. That's what I do.
Yeah. Well, it's like trading is very much like poker, right?
Yeah.
You don't have to be the best at the table. You just can't be in the bottom 50%, or you can't be one of the losers, right? It's a zero-sum game. There's no new money coming into the table. The casino doesn't come in and go, congratulations, guys. You guys have been playing poker long enough. We're going to put some more money on the table with you guys for you to play with. They're raking the pot, right? They just want volume, just like and so to the degree that you can get more money on the table and attract more, that's a zero-sum game, right? And so the best poker players, you can call it luck, but they somehow seem to make it to the final table a lot. Like, doesn't mean that they don't get knocked out, but they have a system of rules and mathematical advantage that they apply to the game. And that's no different than trading, right? You create a set of rules, you apply it, you refine it, you apply it, you refine it. You do that over a long period of time, and you come up with a set of rules that works for you and that you've built and you've got high degree of confidence in, and you roll with,
Yeah, but that's life, right? And, again, I teach trading every day, right? And the one thing I try to get across to people, whether in TWC with us or they're just kind of listening to me out, in social media somewhere, is that the things that I talk about when it comes to trading and how to approach trading and how to be successful at trading are exactly the same things. It's nothing special about trading. They're exactly the same things you need to do if you want to be successful in any other area of your life, whether it's with your job you're at, a business that you own, another skill set you're trying to learn, or a relationship that you're in, right? I mean, these are all the same thing. You have to look at that. And the good thing is, when people come in, most people don't have a great way of looking at life. They're just kind of along for the ride, and whatever happens, it happens. And, it often in their mind happens against them. But, if you change that mindset, the way you're viewing it is differently, all of a sudden you can apply this across everything. And that's the way it should be, because your brain doesn't work, where you think one way in one specific instance and then think another way in another instance. Your brain
it's past 1 o'clock. It's time for my lunch, so I don't know what you guys are doing.
People want the thrill without the preparation, and that's always a recipe for disaster. If you watch the guys who are doing these high risk, like wingsuit type adventures where they're, wingsuiting 5 feet off the ground at 95 miles an hour before they, eventually pull their parachute, they are the most meticulous, detail-oriented people when they're packing their parachute, when they're prepping their launch site, when they're going through the iterations of what curves they have to go through. They're memorizing flight paths and the maneuvers. They're visualizing it 10,000 times before they ever make the jump. Like, they're doing the work that's required to manage that amount of risk.
Exactly.
That is life. So if you want the thrill, expect the misery unless you do an exceptional amount of preparation.
Full circle here on Beards and Bitcoin. We've got Bitcoin, we've got trading, we've got finance, we've got birth rates, and we've got squirrel flying off a mountain.
This is how you know someone's rich. When they're sitting in their mansion and they've had food delivered to them and they're eating with a plastic fork. That is how you know.
Oh man, no, really, I think great conversation today, and but it's the reality of what it is, right? At the end of the day, we are at an inflection point right now. We're seeing the change, and here's the thing, most people are not going to notice this, right? Most people, would you guys agree? Most people that are out here in this world right now, even those in Bitcoin, ancillarily, not just like every day in it, they're not going to notice this change. It's like they're going to wake up one day and all of a sudden the financial system is different now. Now it's Bitcoin base layer. Now it's all this stuff going on. And then you know what? What's going to happen at the same time is we're going to go from central banks to AI managed. Now,
Yeah.
I mean, I don't even for a second think that's far-fetched.
Now,
And
again, you're
most
going
people are
far
missing-
off field. We don't have central banks anymore. We got computers that manage the system. What are you doing? What are you doing
I'm telling
over
you what's
there?
coming, man. I'm
He's
telling you.
working on his next novel.
Yeah, he is. He
Listen,
is.
I
He
think
is.
ultimately, Chris, the aliens will be using Bitcoin to trade. They want some of this action too.
We're good.
No, they're using entropy. They're using entropy credits.
Listen, here's the thing. As long as it makes the people on Wall Street money, they'll
They'll do
keep
it.
pumping it.
Yeah.
Yep.
That's what it's all about, right?
It's the hottest ticket in town. The money is power, and
Freedom.
they want to as much as they can get it, and Bitcoin allows for that. It's something that is you can pump an infinite number of dollars into and justify it. You see what I'm saying? Like if you pump infinite number of dollars into a house, there's other houses that are called comparables that you then judge it against, and you go, oh, that's the most expensive house on the block. But here's the thing with Bitcoin, there are no comps. There are no comps.
Right.
There's no second best.
Mhm.
There's no second. There's nothing like it.
What was that?
It's a completely unique asset that's never been created nor could be duplicated ever again. So the fair and equitable distribution you couldn't get now. If you launched 2.0 Bitcoin and it was Bitcoin but 2.0, same protocol, cloned, and everyone started adopting it, the governments would come in and start mining the crap out of it with all of their national reserve energy and take over and it would corrupt the natural progression of inflation. We experience something that only happens when it's organic.
Yeah.
And it was organic with Bitcoin. And so to think that that's not going to be, for all the degens out there, if that's not the Bored Ape yacht or the crypto punks of the crypto coins, nothing is. And just by that stature alone, I think that we haven't seen anything yet. It's just we're the tip of the iceberg.
Yeah. So message to those who are just getting into Bitcoin this year or right now, and you go, oh my God, it's so expensive. It's 118,000. I'll never get rich on it. Just understand you're still at the beginning of what's to come. You got to think beyond tomorrow. You got to think, beyond next week, next month. And that's what you should be doing with Bitcoin anyway. That's the one thing I, tell people is, if you're going to trade, trading's fine and whatever, but make sure you're, accumulating Bitcoin as well. Because if you're just trading it out there, odds are you're probably going to lose it because you don't know what you're doing anyway, unless you get out there and learn.
Here's wisdom.
Man, what do you do?
I was floating in the lake with my kids, and we went to my wife's grandfather's house. He's passed away. He's not with us anymore, but he was an unbelievable gentleman, and I had the honor of knowing him for a long time. Very wise guy. He bought the house, I discovered, for $30,000 back in the 50s. This house is worth a lot of money now, quite significantly more than that. Large multiplier. But here's the thing that you can look at with Bitcoin, and here's kind of the way I look at it when I'm trying to explain it to somebody who doesn't understand it. Everything's going up in price. Houses, groceries, gas. If you told every generation what the goods and services of the next generation would cost when they were at that age, they would call you liars. I was alive when gasoline was sub-$1 a gallon.
Yep.
I've seen it with my own eyes. I was alive when the median house would cost less than $200,000. It
Yep.
more than doubled since then. So all these things are evident, but it's evident over a long period of time. Here's the thing about Bitcoin. It just can't be manipulated. So it's going to go up more than all those other things, which allows you to buy those other things at a later date when you couldn't otherwise buy them. So it is your wealth preservation tool, essentially, against inflation.
There you go. There you go. Well, we are an hour here, so I guess we'll go ahead and get out of here. Y'all will come to appreciate my questions about, birth rates and whatnot when it comes to this in the future. You will.
I'm just looking forward to the time on Beards and Bitcoin where it's just your head and it's like in a bubble. It's like swimming, and then there's just robots underneath it. Like it's just your head and your spine, and it's just like you're kind of bobbling there. Yeah, I'm looking forward to that particular episode of Beards and Bitcoin.
It's coming, man. It's coming.
We won't have to buy clothes. It'll just be, it will be so much more efficient,
There you go. It's all about efficiency, right?
Yeah, exactly. Singularity.
All right. Listen, hey, I appreciate you guys as always. Listen, y'all, remember, in trading and markets in life, the only thing you control is how much you lose, right? That's it. So, always be working on your risk management.
But not really in divorce court. That's not true for divorce court. You can't control how much you lose in divorce court.
But you control it in the person that you choose.
I've had an issue with losing weight. I don't seem to be able to control how much.
There's always something, right?
Lose. Mm-hmm. So I think we need to adjust your theory. It's like
we gotta get a new slogan.
Clothes only counts with horseshoes and hand grenades, except for horseshoes. It's like there's a couple of exceptions here, Chris.
Only if you're trying to make excuses, my man. Only if you're trying to make excuses.
Says the guy that looks like me.
It's gotta be, man. It's gotta be. Hey, listen, we enjoy you guys. Thank you so much for showing up. Everybody else for joining in as always. We do this every Wednesday, 11 a.m. Central, 12 p.m. Eastern. Come join us. We try to have a lot of fun. And
hey, don't come join us if you're going to buzzkill us. We just do this to hang out with each other and have fun. So
yeah, we can write this off business wise. This is stuff I have to do for the business.
Listen, this is just me getting to see Andrew in his vest every week. It's too important for me to pass up.
Mm-hmm.
All right. Y'all take care. We'll see you next Friday. And make sure you follow these guys. You can follow Tillman on Twitter there. X, I guess I still call it Twitter. At TexasOL61. You can follow Andrew at AP_abacus. And you can follow me at TXWest Capital. Y'all take care. We'll see you next week. Thanks, guys.
You.